Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Now, UP has been modified and the electoral tsunami, as it's being called, has lifted equity markets to all-time highs. So as the Nifty and the Sensex flirt with some pretty dizzying levels, how do you play the rally? What are the top mutual funds and the best stock bets that can drive your portfolio returns and maximize your wealth? Well, that's exactly what we're going to be discussing on this show and this edition of Money, Money, Money. And joining me to do that are personal finance experts Hemant Rustagi and Kalpesh Ashar, as well as market expert Prakash Diwan. Prakash, we've got you on the money, money, money chair today because that's what it's all about, making more money.
Absolutely.
As the market hits these historic levels. So the one question on everybody's mind is there more to go or not? In fact, before I get you to answer that, I think we have a first caller on the show because Money, 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 very interactive. We try and answer as many of your queries as possible. We have Tarun Gupta joining in from Delhi. Hi, Tarun.
Hi.
Okay, so what's your question? Are you an avid investor in the stock market? Do you invest via funds or stocks? What route do you follow?
I actually follow the equities, the share market. So I just wanted to know, I just wanted to invest 50,000 rupees for long term. So what would be the right time to get into the market? Is this the suitable time?
Oh, you're asking that question, right? Timing this market, is it right or wrong? Or Prakash, the hardest question, I'm gonna let you answer that. 50,000 at all-time highs. Wait, get in now. What's the sense?
So, classically, the answer is for long-term investments, any time is a good time. It's always been proven in hindsight that timing is difficult and to the extent that it's rendered futile. So if Tarun is probably, wondering that he's missed out on the rally and the good times have gone past, let me assure him that even the FIs have a left-out feeling. Today they've bought stocks worth 4,000 crores, whereas the DIs have been actually also booking profits because they started much earlier at 7,900, 8,000 levels. So, it's all relative in terms of when you start and when you exit. You hold on till the company does well, till the investments start, they continue doing well for you and delivering what you expected out of it. So I think there's never a good time, a bad time. It's just when you have the money, you invest. When you need the money, you take it off. And I'm sure our experts at the mutual fund side will ratify that philosophy. Importantly, it's a stock-specific market. Today, if you see Nifty, the Sensex were up almost a quarter to 2% kind of a move, but the small cap, mid cap was not yet as frothy. So you still have a lot of space there. You still have a lot of headroom for growth, re-rating for new sectors, new names coming in. And they need to continue watching you guys.
Okay, well, we've been getting a lot of global opinion as well as far as global brokerages are concerned, global fund managers are concerned. So what is their view on India? Will this Dalal Street party continue? Here are some views.
India, because of the domestic demand story, is by a long way, in my view, the most exciting emerging market equity story in the global context. In the short term, China is way cheaper than India, so there's been a trade going on in China, and it can definitely outperform India in the short term. But in the long term, I'm very much structurally overweight India. I have more than 50% of my long-only Asia ex-Japan portfolio, which is like 25 stocks in Asia linked to macro themes in India, but I'm very much focused on the domestic demand story in India.
We're very positive on emerging markets, which obviously includes India. We think we're at a very early stage of a recovery in the relative performance of emerging markets versus developed markets. We expect flows which have been outflows, if you look at open-ended funds, 13, 14, 15, and only basically neutral in 16. We think flows could be very positive this year, next couple of years, as people return to EM because it's offering premium growth. And India will get a share of that story. So I do expect India to move higher with emerging markets.
I think it removes one of the concerns that the market has, that if you had an unfavorable election result, then it could cause market to sell off. I think, you've had enough scares along the way. Demonetization obviously was economically hurtful for the economy short term. Now with the political backdrop becoming more favorable, I think it gives investors the opportunity and fund flows the opportunity to take this market up to levels which would probably suggest that valuations could go well above historical averages. And I think that's where the market is now headed.
Okay, so largely positive views. Still, a lot of faith being kept in the Indian equity market. The question is, how do you play it? We'll come to stocks in just a bit. But if mutual funds are the route that you prefer, then we've got two experts in the house today to tell you about 5 top mutual fund ideas. So, Hemant, I'm going to start with you first. What sort of 5 funds have you selected, and on what basis?
See, basically, to begin with, I've selected 2 multi-cap funds, especially those that have bias towards large cap, because I believe that, in terms of valuation, they are quite attractive. The second thing is that it depends on the kind of investor you are. If you are someone who is looking to build up your portfolio, you shouldn't be investing with a lot of aggressive funds. Okay, so the first fund is Birla Sun Life Equity Fund. This is a fund, like I said, it's a large cap-oriented multi-cap fund. This fund invests in those companies which have competitive advantage in the industry. And the fund manager has been quite smartly able to kind of, allocate money to different segments of the market. And this fund has consistently been outperforming its benchmark and the peer group.
So I'm just looking at the past returns. I mean, not to say that past returns will guarantee future performance, but 34% over the last 1 year, 24% 3 years, 20% 5 years. Are you expecting, this sort of stable performance to continue with that?
Well, yes, this fund has been performing consistently over the longer period. So there is no reason. This fund has proved, because you've seen many ups and downs, and the fund has performed consistently. Okay. So you can expect the fund manager to perform consistently even going forward.
So that's 1 down, 4 more to go. Top funds.
The second one is Kotak Select Focus. This is again a multi-cap fund, large cap oriented. This again fund is a fund which invests in those sectors which are likely to outperform the broader markets. And in keeping with that, this fund takes a concentrated bet in certain sectors. But in terms of stocks, it's fairly diversified. It usually has around 45 stocks. And I believe that this fund has a potential to be a part of the core portfolio of every investor who wants to invest for the long term.
Where do you rate it in terms of the risk category?
Well, like I said, it's large cap oriented, so it's more focused on the large cap.
Okay.
And it's fairly diversified in terms of stock. So I believe that, even if someone wants to start investing, he can start investing with this one.
Okay, I have your list here with me, and the next 3 funds seem to be slightly more on the aggressive side. So high risk, high return funds.
Yeah, absolutely. The next one is DSP Small and Mid Cap. As the name suggests, this fund invests in 2 aggressive segments of the market, small cap and mid cap. In terms of valuation, you can say that right now, valuation looks a little overstretched as far as these 2 segments are concerned. But I think it's always advisable to have at least one quality mid and small cap fund in the portfolio. Basic differentiation between different funds in this segment is stock selection. And I think here this fund has proved over a period of time.
So you like the fund managers approach?
I like the fund manager, I like the stock selection. Like I said, that's the key for a small and mid cap. So obviously, because being aggressive, you need to be very careful in terms of how much money are you investing in such a fund. So I would say maybe 10 to 15% of the portfolio can be in mid cap and small cap segment. Okay,
this fund's given a 39% return over the last 1 year. So pretty aggressive small cap and mid cap fund. The last 2 for you.
The next one is L&T Infrastructure Fund. And I think there are quite a few reasons I believe that someone who can take risk should be looking at this one. One is, unlike many so-called infrastructure fund which are nothing but diversified fund, this allows investors to benefit from pure infra play.
But the market's been talking about the return and the revival of the infrastructure cycle for a while. And that's why if you look at the 5-year returns on this fund, it's been a bit of a non-starter because, the whole capex recovery, etc. hasn't really happened. So you're expecting that to change and this fund to take off?
I do, and that's the risk, obviously, when you go into a fund like this. It's a thematic fund. And it is quite possible that a certain thing may not work for a prolonged period in the market, so you need to be very careful there. So I believe that that's one reason I said. The second is we have seen the renewed focus on infrastructure in the union budget. And with this kind of mandate, I expect that the government will do more infrastructure spending. So I believe that someone who can take risk and understands what comes with it can look at L&T Infrastructure
Fund.
And
very quickly, after infra, what's your last fund, the top 5 from Hemant?
It's an ICICI Banking and Financial Services Fund. What all is going to happen in infrastructure space, the focus on affordable housing. I believe this is one fund which is going to benefit from that. It has a good mix of banks, NBFCs, and also housing finance companies.
Okay, we need to take a really quick break on that note. But on the other side, your questions answered. You will get 5 more fund ideas and Prakash's 3 top stock bets if you want to go the direct way in the equity market. We'll be right back.